Good evening, guys, and welcome to our revision class. We are getting into assessment 2 already, so you guys have an idea of how it was in assessment 1 when writing. All right, you guys have an idea, so you know how you performed at this point in time. Life has to get really, really serious. We know how we did. If you did bad, this is your chance to pick up the marks. All right. So, guys, welcome to Accounting with Naomi, FAC 3764 revision for assessment 2. Now, if you are coming here, you're just coming in, please make sure first of all that you are subscribed. Please subscribe, take the time to subscribe to the channel, subscribe and like this video. Okay, subscribe, like this video, and then share the link. All right, so share this link with all the groups that you're coming from. Let everybody know that we are live. We are working on FAC 3764 revision for the upcoming assessment 2 that is coming. Please do let people know, put it on your status, put it on the groups where you're coming from. All right, please make sure you do that. Make sure you're liking, make sure you are subscribed. Please also let's keep the comments as respectful as possible, and you have a chance to ask all your questions on the comment section. Please note I had to pre-record this session because of the network issues I've been having. I don't want us to get cut in between our classes, hence I'm pre-recording the class. Okay, yes, I am pre-recording the class because I don't want us to get cut. Okay, so I'm sure you guys are seeing EUREKA tutoring. Please note this is my college, my online college. If you do wish to register with us, hi guys. Yes, okay, this is Naomi. Yes, like I was saying, you can see EUREKA tutoring name there. If you do wish to register with us for online classes, we do classes every week. We also do prepare you for exams and assessments. We do revisions before assessments, and before exam we do revisions. Okay, so if you do wish to join us, you are welcome to join us at EUREKA tutoring. I will put all the details of EUREKA tutoring on the description. Okay, and the description you get all the links, all our contact details if you do want to contact us to register for all your modules, all your Unisa modules, the financial accounting, management accounting, auditing, taxation, CAS, every other module. Please just contact the detail that I've put there on the description. All right, so you are speaking to Naomi Kerekeza, and I am your lecturer with FAC. I do all the financial accounting as well as AIN. All right, so I'll be taking you through the revision today. I just wanted to talk a bit on the EUREKA tutoring. Again, guys, if you are just joining us, please make sure you subscribe. Please make sure you like this video. Make sure you share this video with all the groups you're coming from and all the students you know, because this is gonna be good. All right, so let's get going, guys. Let's get started with our revision for today. Okay, let's get, like I was saying, if you are just coming in, right, if you are just coming in, please make sure that you have subscribed, number one. Number two, make sure that you have liked this video and that you have shared the link with others. So let's get going, and please keep reminding people on the comment when you see others joining in. Just keep reminding people on the comment that as you are coming in, make sure you subscribe, you like, you share, and let's keep our comments as respectful as possible. Remember, the video is pre-recorded, it's being premiered, but I am available to answer all your questions. Put all your questions on the comment sections and I'll be answering you same time. You get your results as you ask. Okay, so guys, with that being said, let's put the video away. Let us focus on the work. Let us get serious with the work. So what is on assessment 2? First of all, in assessment 2, they are examining property, plant, and equipment. Guys, I know this is our favorite. All of us love PPE. Property, plant, and equipment is being assessed. Then you have fair value measurement. IFRS 13 is also being assessed. But you know, fair value measurement, it's one of the shortest topic, and we've been working with the fair value elements for a while. So already we have an idea. PPE, we've been doing PPE since first year and all the way to third year. So we all have an idea. So that's the good thing about assessment too. And then from there, we also have intangible assets. Guys, intangible assets is more or less like PPE. So the only difference is the other one is physical asset that you can literally see and touch, while intangible asset you cannot touch, right? So, but the work is almost the same. The calculations are almost the same. Almost everything is the same, right? And then you have impairment of assets. So impairment of assets cannot be tested alone. It has to be integrated into property, plant, and equipment, intangible assets. Oh, yes, and investment property. All right, and investment property as well. Investment property most of the time is being tested along with property, plant, and equipment. So property, plant, and equipment is owner-occupied asset, while investment property is leased or rented assets. So that's the only difference. So they usually come together. You just have to look out for the word owner-occupied. So you take it to your PPE note, and if the asset or the property is leased out or the property is rented out, then you take it to your investment property. Right, so yeah, that's basically how it works. And then we have the lastly, non-current asset held for sale. Now guys, you need to note the difference when it comes to this is that there's disposal. Disposal happens when an asset has been completely sold or written off or exchanged, whatever the case is. It's just being derecognized. Okay, so the asset is derecognized, right, because of disposal, like a sale, right? Non-current asset held for sale. This one, the sale has not yet taken place. However, the management is committed to selling the asset within 12 months. Management is committed to selling the asset within 12 months. So it moves from the usage to sale, right? It's now realized through sale and no longer realized through use. So what we have to do is transfer it. If it is a PPE item, we're going to transfer it from PPE to non-current asset held for sale account. All right, so that's how it works. Those are the topics. So just to go back to them again, assessment 2 is going to assess or test. It's going to test property, plant, and equipment. It's going to test intangible asset. It's going to test investment property. It's going to test fair value measurement. It's going to test impairment of asset, and it's going to test non-current asset held for sale. So there are 6 topics that are being tested here. Now, in this revision, I'm going to work through a past question. It is assessment 6 from 2023. The reason why I chose this question, please note I have put a link of the question on the description, right? So you see the link of the question on the description. If you wish to download it, just click on the description and it take you to my drive, and then you can download the question, all right, and follow along with me. Anyways, let me just pause a bit, guys. Let's all download the question. Please go ahead and download the question. Go to the description of the video. The description of the video, you will see a link there. Click on the link and download the question. Okay, it is assessment 6 from 2023 paper. All right, the reason why I chose this particular question is because it ties up everything we're looking at. All the 6 topics that I've mentioned, it actually ties it up in that particular question. So that is why my focus is on that question. That's why we're doing that question today. It will be a best question to practice from. Now remember, this is not the limit. You're always asked to do more questions, but I'm working with you guys today. I want you to pay attention to all the tips that I'll be giving. I want you to pay attention to all the explanations, how I attempt the question. Guys, it's about teaching you how to think, right? It's the thinking process that we're focusing on, right? So please pay attention to all the thinking process. In between, I will keep on asking questions. Do you have a question? Did you understand? Did you want anything? Remember, I repeat, the class is pre-recorded. However, I am available on the comment sections to answer all questions. So you are free to ask your questions as the class is going on. Okay, So with that being said, I believe we all recorded. So if you are here at this point in time, I believe you all downloaded the question. Click on the link on the description, subscribe to the channel, like this video, um, um, share the link with other people, share this video with other students in other groups. So let's get many and let's get going. All right, so I want to bring in the question that we're working on today. Awesome. Right. So like I said, it is the 2023 assessment 6, which is more or less close to what you guys are writing today. There are, I think, 2 other topics that are here. I think it was employees benefits and fair, what is it? Foreign exchange transactions, right? Just those in addition to what we are doing. So never mind that. Let's focus on the one that we are really have to prepare for our assessment. Okay. So yeah, there it is. It was a 50-mark assessment written in 2023. These are the instructions. You're welcome to go through this in your own time. I want to go straight into the question. Right. So let's get going. It says here, just a minute. I want to just move this side. No, okay. Right, so it says here, before you read the scenario, please take notes. Before the scenario is read, always go through the required section first, okay? Go through the required section first before you read through the scenario. So it goes as follows. It says critically discuss. Very important, they use the word critically discuss. Now, once they're saying critically discuss, that they're actually you're looking at something that's been done, and then you are now basically telling us if it was done appropriately according to a particular principle or standard, right? So when you are critically discussing something, you look at both the positive and the negative. In other words, what was right versus what was wrong. Don't only focus on what was wrong. So a lot of students lost marks. I remember in this paper, a lot of students lost marks because they only focused on what went wrong, what was not done correctly. So you will give us both what was done correctly and both what was done incorrectly based on what? A principle, based on a particular principle that we are looking at. Okay, that's how it is done. So let's continue with the question. So then it says, critically discuss what? The impairment loss and allocation of impairment loss, calculations of the what? FF division. So we know that the focus is on FF division as prepared by the junior accountant. Guys, one thing about accounting, once they start mentioning the name junior accountant, inexperienced accountant, or anything similar to that, just know that there's about to be an error. Okay, so it's more like an introduction to an error that you know there's gonna be a problem because this person doesn't have experience. If they're a junior accountant, there's a high chance they don't have much experience, okay, or they rely on the senior accountant, right? There's a high chance. So already we know that there's about to be an error. Okay, right. Prepared by this junior accountant of Bev Martin Limited. Very important. You must always know which firm you're working with. Which company am I working with? Which company am I putting my focus and my whole into? Very, very important. Okay, then we go on. It says on 30 June 2023. Oh, guys, there is no accounting without periods. Accounting is about periods. So when we were doing anything in accounting, we're working with 12 months, right? So we're saying the year ends in June. That means it started in July 2022. So that's the financial period we're working with, and we are limited to that period. Then it says you can assume that the casting and the cross-casting of the calculation prepared by the junior accountant is correct, right? Include within your discussion. Now, guys, the question is a discussion. I just want to pinpoint this. The question is a discussion. Don't give us a calculation like on the go, right? Don't give a calculation on the go. Discuss it. Then show a calculation, then discuss the calculation in words. In other words, write what you would put as numbers, write them in words. Okay, and explain why you're doing so. Right? It is a discussion. A lot of people get lose marks here because we all want to jump into a calculation, but it is a discussion. Okay. So include within your discussion a corrected impairment loss calculation of the FF division of Bevmart Limited as on 30 June 2023. So within your calculation, also do correct the calculation. Guys, guess the mark allocation. 24 marks, and then you get 1 mark for communication. Now, usually this one is usually given to you if you just follow the fact that you just did a discussion. Even if you get like 0 for your discussion, the fact that you did a discussion and you're writing in words, you're gonna get your 1 mark. Okay, so I believe like this are usually just like there to just boost your marks and all of that in case you're really doing bad, just to boost you, right? So yeah, that's the first question that we are going to look at. Now, I always tell students, don't just jump into the next one. Just you look at this and you're jumping into the next one. No, read all the required sections first, so that when you are reading the scenario, you know what to look at, what to look for, because you have understood what the whole scenario is looking for. Right. So it says this is 24 marks, basically 25 with additional 1 mark. Then we go to the second one. It says disclose the profit before tax note. So here you're going to do a note. The first one you're doing a discussion, although you are correcting a calculation, impairment loss. Then this one says disclose the profit before tax note. This is a note. This is purely calculations here. But remember, you have to give us a format of the profit before tax note. It has to be correct. In the annual financial statement of Bevmart Limited, which is the company, for the year ended 30 June 2023, again, it is our financial period starting from July 2022 to June 2023. Now, include all relevant disclosable incomes and expenses items. Now, they're not telling you which one you should include. You should read through the whole scenario and pick up incomes and expenses that are affected in this scenario and include them in your profit before tax. Right, from the information given in the question together with the disclosure regarding they also want disclosure regarding change in useful life of delivery vehicle. Okay, they also want that to be included within your profit before tax notes. Right, and again, it's another 22 marks. So, the allocation of the marks in this assessment was something else. Like, there's no breathing place. 24 to 22, like no breathing. Hey, right. The last one, it's always going to be something like this. You're always going to have this in every assessment just to boost you. This is only a general knowledge. Usually you will know this from your auditing module, and therefore I'm not going to do it in this class. I believe this is just general knowledge. Anyways, we can just read through it, right? But I'm not doing this in this class, né? So this one is just there to boost you. It's just, just at least if you didn't really study, you don't know what you're talking about. At least you have 3 marks, Yeah, at least you have 3 marks, and that 1 mark there's already 4 marks. You already have 4 out of 50. Okay. And the bad thing about these people, they don't just give you even these 3 marks. Come on. Unisa lecturer should just give you those 3 marks because it's just there to boost you, right? So it says, advise the CFO of Bevmart Limited, whom is a CASA, on the legal and ethical considerations of the donations of the SUV by the Research and Development Division to the employee of the Department of Health once he becomes aware of it. Okay, so here we are looking at the ethics that actually binds your chartered accountants, right? How they should behave in professional manner, right? So you're looking at that angle, okay? As I'm saying, here it is really about read what is the problem that is in place, and then now tie this up with like professional behavior of a CA, what is expected of a CA, how they should behave in an ethical manner. That's what basically is happening here. Okay, So with that being said, there are other instructions as well that you should read. Please, I know most people don't just read this part. Read it, it's very important. It says, your answer must comply with the requirements of international financial reporting standards. In other words, you have to work in line with the standards using the principles, all right, and the format according to accounting. So when we're asking you to disclose profit before tax note, don't give us a funny format, all right? Give us the proper format. Now, a profit before tax note has a particular format. That's what you're looking for. Okay. If the question would have asked you to do a calculation, it's just a calculation, then you're free to just do whatever calculation. However, there are some calculation, like for example, your deferred tax calculation, they have a format. All right. Other calculations also have formats, but majority of the calculations, it's really your choice. But if they ask you particularly, give us a statement of something, give us a particular note, we want it like that. All right. Okay, then it says the accounting policy note is not required. Comparative information is not required. Do not talk about last year, only focus on the current year. All calculations must be shown, very important. Then calculations are to be done to the nearest rand. Now, I want to just hit on that one. Some discussion questions would actually say no calculation should be included. Guys, you have to be very careful. If they are saying no calculation should be included, then do not include calculations. Only explain it in words. And the best way to actually hit a discussion well is to explain most of the things you're saying in words. Don't give them a calculation unless if they ask. Like in this question, they did ask. We are going to do that. But most questions rather limits the writing it in the calculation form than explaining it in words. All right, so explain it in words. Okay, so that's basically it. That's what we're looking at. So as we are going up there, while we are busy criticizing the impairment loss calculation, also keep in mind that I need incomes and expenses items to take into my profit before tax notes. So that's how it's going to be. All right, with that being said, let us go into answering. Now, before we go into answering, I want to go to our first question, which is A. That's the one that we're going to do first. Now, if you look at A, it says what you're giving a discussion. How does one break their discussion? I want to talk about the breaking of discussion. Now, I've seen that a lot of students actually struggle when it comes to breaking down discussion. A lot of students actually fail when it comes to discussions. They do well in calculations, but when it comes to discussion, they actually at most time do not perform well. Okay, so it's important that I actually go through that with you guys to tell you how a discussion should be done. So let's look at that first. So what am I looking at? Before I break it down, what am I looking at? First of all, what is the instruction? Okay. Then I have to look at the marker location. The marker location will determine the volume of my discussion. All right. Then, so it's what have I been instructed to do? What is the marker location to know the volume? And then which standard am I focusing on? Even in that standard, what aspect of the standard am I focusing on? All right. So you don't just give us the full standard. So impairment loss is basically IS 36, right? So you don't just come and give us IS 36, the full of IS 36, everything that IS 36 says. No, the focus area in here is that you're going to look at the calculation of impairment loss, what makes up the calculation and allocation. What makes up the calculation of impairment loss and allocation of impairment loss. That's the only thing we are focusing on. And any other thing that we could find in the scenario that also needs us to focus on, because it maybe touches another element in the scenario about impairment loss that we need to focus on. Okay, so you go to that particular element. Don't just talk about everything. Don't come here and give us the whole textbook. Don't copy your whole textbook and give it to us here. Focus on what is being asked. Okay, so yeah, that's another thing. And then you need to also know the financial period. Very important. Sometimes they may not ask you for the full year calculation. Sometimes they may ask you for a particular day. They will say as at on maybe 23 June 2023. They want only what happened on 23 June. So don't just come and give us everything that happened the whole year. Okay, be very careful. Your date, is it asking you for the full financial year, or is it asking you for a particular date? Now, remember what I promised you guys in the beginning. I'm teaching you guys the thinking process. If you can have the right thinking process, you are going to excel. Oh my God. In fact, cum laude will be yours. Distinctions will be yours if you have the right thinking process. Okay. Right. So that's what I wanted us to touch on first. Then how do I break down my discussion? Let's go to the top. So in the class, I avoid writing many things. So I do more calculations. The discussion that you will say it, so that I don't have to write a lot of things. I will tell you what to discuss. That's why I'm giving you guys a framework of how you should do this. So in my discussion, right, what am I expected to do? All right. So there are basically 3 steps. The first step of your discussion, after reading the required and knowing what is being looked for, you will then give us sort of an introduction. An intro. Now, what am I looking for in this intro? All right. So in this intro, I'm basically going to the underlined principle. Principle as per the standard. Right. In this case, in this particular case, if I have to look at the underlying principle that they're talking about here, I will look at impairment. What constitutes impairment? So in this case, it will be impairment loss calculation. So what will institute it? What calculations and allocation? This I'm taking directly from my IS 36. In other words, you're taking this from your study guide. Okay, in Unisa, you're not really expected to work through the standards in this level. It's only in CTA and honors level that you have to work through the standards. All right. So this is the very first thing. That is my introduction. So when I attack this question, remember you're answering this and you're looking at the specific thing. They're talking about impairment loss and allocation. So I'm going to go to IS 36 and talk about impairment loss. For example, remember I said I'm not going to write everything because it's going to be a lot of writings. Né? So I want you to listen carefully. So for example, I could say something like, according to IS 36, right? So IS 36 impairment loss. If I don't know that it's IS 36, it's okay. I can just say, according to impairment loss, right? According to impairment loss, an asset is impaired when the carrying amount exceeds its recoverable amount. All right. So you can talk about that. Okay. And assets, let me just write. Let's see how far we'll go. I'm trying to avoid too much writing, but yeah, why not? So in this case, you could say something like according to IS 36 impairment loss, or according to impairment loss, an asset is impaired when its carrying amount, please write in full, guys, please write in full, its carrying amount exceeds its recoverable amounts. Okay, so here I'm already saying this is how the calculation of an impairment loss should be. All right. Then remember now, for us to talk about allocation, it's either if I'm focusing on either a cash generating unit or if I'm focusing on a disposal group. Okay, full stop. In a case of a disposal group, so you can come here and say, in a case of a disposal group or cash generating units, in short CGU. Okay, then you say impairment loss calculated will be allocated to assets within the scope of impairment loss, or if it's non-current asset held for sale, you say IFRS 5 within the scope of IS 36, which is impairment, or IFRS 5. Okay, so you can stop something like this. This is just an example, guys. You can do more than this, but this is just an example. This is limiting me to particularly talking about impairment loss and talking about allocation of impairment loss. So this is me bringing in my what do you call, my introduction. All right, so that's basically the introduction part. You are welcome to put more, but remember to limit it to what has been asked. All right, so that is the first step when it comes to discussion. Guys, this is an explanation, okay? That's why I wrote number 1 introduction. Don't go there and write number 1 introduction. Just start according to whatnot. Right. Then we get into the discussion. So step 2 is now where the actual discussion happens. Now, I remember saying in the beginning, check the mark allocation. Right, I remember saying in the beginning, guys, check the mark allocation. The mark allocation will tell you the length of your discussion. Your discussion is supposed to be lengthy, but if that mark is just 3 marks or 2 marks or even 4 marks, you don't have to write the whole, like everything in you know, for that. Okay, but make sure it is lengthy enough, like it gives enough detail of what is being asked. Now, what's your focus? What is really happening on the discussion section? So here, what's happening here is that you are now going to link the scenario to the principle that you presented as your introduction. So here, what you're doing is you're linking the scenario, okay, the scenario in the question, to the principle in question. That's what you're doing. Okay, so we did say impairment loss happens when the carrying amount exceeds recoverable amount. Is it true? Is that what is happening in the scenario? So you are trying to prove that, all right? You're also trying to prove that it's done calculated correctly. Also trying to prove that the allocation was done right. Are the asset within the scope of IS 36 or IFRS 5 if there's IFRS 5 anywhere, all right? So all of those things, that's what you're trying to basically look at. Remember, the instruction was to critically discuss. That means you're going to talk about the things that are correct and the things that are also incorrect. Now, please take note. It's very important when you are discussing, speak the scenario. All right. So in other words, when I'm saying speak the scenario is use. So you're going to use the names, the dates, amounts, and every other thing, etc. As mentioned in the scenario. As mentioned in the scenario. Okay, that's what you're going to do here. As mentioned in the scenario. Don't just say the company. Rather give the name like BevMart Limited, right? Instead of saying the company, say BevMart Limited. Instead of saying the director, if the director's name is given as maybe Mr. Fresh, say Mr. Fresh, all right? Instead of saying the item, if the item's name is given, give that item's name. Instead of saying the assets, if the asset's name is given, for example, delivery vehicle, mention delivery vehicle, right? So it has to speak the scenario. Now, a lot of students make that mistake. Don't be general. Don't speak general. This is not principal. This is now you are basically discussing what is in front of you and tying it to the principle that you gave. Remember here, we are talking about impairment, assets, everything that has to do with impairment. Remember, we're talking about carrying amount. To calculate carrying amount, it takes us to property, plants, and equipment, or intangible asset, or investment property, or whatever it is that is presented, right? So that means now I'm going into the PPE. So by going into the PPE, I'm going to talk about the cost. I'm going to talk about accumulated depreciation, residual value, and all that things, right? So it has to still be tying up to what you're talking about. Now, I can't now move away from this and talk about other things, for example, employee benefit, all right, or something that is just totally out of what we are talking about. Then you are coming out, you will lose the mark. You're out of your discussion. It has to tie up to the principal, but you must pick the scenario, mention everything that is in the scenario. All right, so this is where most of the marks will come from. This is where the longer paragraphs are going to come from. This is where your energy has to come from. This is where your thinking has to come from. Like, this is where the work is done, because this is where the marks will come from under the discussion. All right, so in this case, we're going to criticize whatever it is that is in front of us. And then once you have done that, lastly, step number 3, this is where you do your conclusion. So a conclusion, right, so this is where you do your conclusion. So what the conclusion does is answers the question, right? It sums up, so it's either it ties up the scenario to the principal, scenario to the principal that was given initially, or it answers the question as required, answers the required question, So in other words, is there an agree or a disagree situation? If that is how it was put, okay, all right, what in conclusion was done, okay, so you're just basically summing up, sum up your findings, basically, sum up the findings. Okay, all right, so that's how your discussion should be. When we are talking about the discussion, that is what we are actually looking at. This is how your format of your discussion should always be. You start by the introduction, give us the discussion, and then the conclusion. Now, it's not all the time that you're going to find this format, but this is the correct format that you must use all the time. If the discussion is just like a straight discussion, like just straight, like by straight, what do I mean? It's just like 3 marks or 4 marks and asking you for a question. Maybe, for example, discuss how impairment loss should be calculated for 4 marks. Just go straight to the point. Go straight to the point. Impairment loss, I'll need carrying amounts of whatever. You just talk about the company. Just talk straight. Answer the question straight. Okay. But if the mark allocation is high, let's say from 5 and above, give us this format. All right. So with that being said, like I said, I'm not going to be writing many things. I'm going to be saying them, because if I have to write and speak and explain whatnot, it may take longer, right? So I will tell you, write this, but this is the format I've given you. That's how you're going to put it. So after this class, you will now go and put this discussion properly. I'm going to focus more on the principle itself, application of the principle, the calculation, and all of that. And then you guys will be putting it in words. Okay, so that's how we're going to work. Anyways, let me pause a bit. If you are just joining us, please make sure you have subscribed. So if you haven't subscribed, please subscribe now. And make sure you like the video, especially the likes, guys. The like is very important. The more the video is liked, the more YouTube will actually recommend it for other students that are not aware that we're doing this. All right, so you guys really need to like so that it can be recommended. And then also share to other people, share to the groups you're coming from, share to other people, let them know that we have a revision going on. Some people are struggling with the module. This could just be a way to help them to perform well in the assessments. Also, guys, I want you to come back after your assessment, how you did. How was the paper? Was the paper similar to what we had? How did you perform? How did this class help you, to prepare for your assessment 2? I want you to come back and give that review again after assessment 2 has passed. Okay. All right. Anyways, let's get going. So from here now, I'm going to focus on the scenario. I'm going to read through the scenario with you guys, and then we're going to now criticize what is wrong and also give them the correct calculation. Now, sometimes you have to calculate something for you to know if it is wrong or it is right. It will be wrong for us to just say this was wrongly calculated. Based on what? You have to do the right calculations, right? So let's read first. So it says, we're now looking at the scenario. It says Bevmart Limited, which is the name of the company, is a manufacturer of a fast-moving consumer goods. Very important. You must understand, what does the business do? Guys, what the business do matters. Not the nature of the business matters, right? So Bevmart is a manufacturer of fast-moving consumer goods situated in Midrand, South Africa. The company is listed on the JSE and has a 30 June year end. The current financial year has 365 days. Okay, very important. The current financial year. Okay, this one will be used later when we need to use days. Anyway, 365 days. Bevmart Limited has two manufacturing divisions. We have the processed foods and the fresh foods. This includes fresh and flash frozen fruit and veg. This one is a play on the tongue. The fresh and flash frozen fruits and vegetable. Okay. Bevmart operates a 5-day working week. 5 out of 7. That's what 5-day working week. All employees are entitled to 20 days of accumulating leave per year. So this is how it has to do with employee benefits. We'll be looking at it later. I don't want you guys to worry so much about this one because it's not part of the syllabus for the upcoming assessment. Guys, please take notes that income tax and revenue and leases that you did for your assessment 1 can still be tested. Okay, it can still be tested, so don't leave it out when you're studying. All right, don't leave it out. They can still bring something from revenue and income tax and leases even in this assessment too. Okay, so while you are practicing, remember, I did say that my class, I wanted to focus on the topics that are like now for the 6 topics that you guys needed to know for assessment 2. But then again, to remember, assessment 1, they may still include some of the topics that was also tested in assessment 1. Okay, let's continue. So then we go. It says the following information relates to the fresh and frozen foods division as well as some of the assets of the company, the FF division. So this is my main focus now. Remember, this is what they did say we are discussing on the FF division. So that will be my main focus. Okay, so it says the FF division of Bevmart Limited manufactures and packages both fresh and flash frozen foods. During the current year, the management of Bevmart Limited noticed a decline in the orders for the FF division products. Fresh and flash fruit and veg, right? The marketing division of Bevmart Limited embarked on a consumer research project. The result of the study showed that as part of cost-saving measures, consumers are planting their own community vegetable gardens, providing fresh fruits and vegetables to the community, resulting in the decline in demand for store-bought fruit and vegetable. Okay, so they actually went on to find out what is causing this decline in orders, and they realized that people are planting their own gardens. People are doing their own gardens. It's even fresher that way. All right, and cutting on cost instead of buying fruit and vegetable from the stores. Okay, so that was their finding. Now, resulting in the decline in demand. Okay, this one resulting in the decline in demand for some both fruit and vegetable. On the 30 June 2023, the recoverable amount of the FF division was estimated to be 1,450,000. So I have my recoverable amount. Now what I need is my carrying amount, so I can know if my carrying amount exceeds the recoverable amount or not. If it exceeds, then there's impairment. If not, there's no impairments, right? So let's go. Now they went on to break down for us the assets that are included in this division. Now remember, they didn't say we are deciding to sell. All right, they didn't say we are deciding to sell. Now, because they didn't say we're deciding to sell, this is not a non-current asset yield for sale. Okay, although the calculation, the allocation is more or less the same. Even if I was drawing the non-current asset yield for sale, it would be more or less the same. So this is a cash generating unit because we are not deciding to sell an asset. You're not saying we're selling this asset. It's not a disposal group, but it's a cash generating unit because these assets are together in one division. Okay. Anyway, so let's go. We have goodwill. The carrying amount is 125,000. And then we have packaging machinery, we have inventory, and we have delivery vehicle. Okay. So they gave us note 1, 2, and 3 to look at for us to be able to calculate the carrying amount of the asset. So what I want to do, guys, because we understand that there's a possibility of impairment, there's possibility of impairment, there is carrying amount, a recoverable amount that has been given. So I'm going to do a calculation with you guys. I want to show you guys, I can't really call it shortcuts, but this is one of the fastest way to get, to be what we are looking for in this situation, for us to be able to do our discussion well. This is one of the fastest calculation that one can do. Now, please follow me through. All right, so we're going to do something like this. Let me label that this is a calculation. Although it's sitting in between, remember what I said, guys, you guys will complete the discussion. I will be telling you things that were done wrong and right, but best way to let's first do the right calculation, then we'll compare it to what the junior accountant did. All right, so this is my calculations. Calculation number 1, I'm going to do this in a form of a table. Right, so I'll have my carrying amount. That's my carrying amount. And then I'll have my impairments, loss, guys, please forgive my skew lines. I could actually use a ruler, but it's gonna waste time. So let's just continue. Okay, as long as you can see. And then here I'll have my recoverable amount after impairments. Or rather carrying amounts, né? Recoverable amounts or carrying amounts after impairments. Okay, so this is how I'm going to do this. This calculation will actually save us the time in doing a long calculation. I'm just going straight into the point. So I understand I have goodwill. I have goodwill. So goodwill was given as 125. There's no need for us to recalculate goodwill. They didn't even give any further information, right? So that will be my goodwill. Then I have packaging machinery, inventory, and delivery vehicle. Packaging, machinery, inventory, and delivery vehicle. Okay. All right, so that's basically how it looks. And then, of course, once that is done, I'm going to get my total carrying amount. I'm going to get my total impairment loss, and I'll get my recoverable amount or carrying amount after impairment. So if there's impairment in this, the recoverable amount was already given. So that's what I'm expecting. That's the total. If you go back to the question at the top, it was given as the recoverable amount at 30 June 2023 was given as 1,450,000. 1,450,000. So that would be my total recoverable for the whole division, the cash generating unit, CGU, 1,450,000. Right. So at this point in time, I do not know what is the carrying amount of the full FF division. Let me even write it here. I need to indicate that this is for the FF division. This is for the FF division at 30 June 2023. That's basically what we are looking at here. All right, so with that being said, I know all the information that I know, I've put it down. Let's get into the information that we do not know now. So I want to now calculate my packaging, machinery, and the other things. Okay, quick number 2. We start with packaging machine. Guys, you don't need to label in the exam. It's going to waste time. I'm just doing this because this is a class. In your assessment, you don't have to label these things. Right, so I always do my calculation this way, and it really does help. I will put everything that affects the packaging machine here, and then we'll take it there like that. Right, so let's now go and read through the packaging machine. What were the information that was given, and then we take it from there. Back to the question. Packaging machine sitting in here. Okay, let's get our highlighter. Perfect. So on number 1, it says Bev Mart Limited purchased the packaging machinery when on 5th August 2020 at a cost of 1,575,000. An amount of 18,500 was paid in cash on 6th August 2020 for what? Delivery of the packaging machine. All right, since the packaging machine is very specialized, Bevmart Limited had to pay a consultant. They pay a consultant 5,700 to train their employees on how to use the packaging machine effectively. The packaging machine was available for use, very important, as intended by management and brought into use on 1 September 2020. The packaging machine has an estimated useful life of 7 years and a residual value of 185,000 was allocated to it. On 30 June 2023, the recoverable amount of the packaging machine was estimated. This is now the recoverable amount of the specific item, not the CGU, was 950. Okay, so that's the information that I have of my packaging machine. Right, so we're going to now try to calculate the cost of these. Okay, so I want to start off with the cost. Okay, I want to start up with the cost at the time that it was available for use, 1 September 2020. Now, to do that, so we have the purchase price. We have the delivery costs, and they said what? Consultancy fee. This consultancy fee was what? For training fee. Let me call them training fee, because if I say consultancy, it's too vague, it's too general, in fact. Right, training fee. Okay, so those are the costs that were mentioned in here. Okay, starting with the what is it called? The purchase price. So the purchase price, like we said, it was 1,575,000. So that is 1,575,000. Then the delivery fee, if I remember correctly, it was 18,500. Delivery fee will be capitalized because this is directly attributable cost. However, the training fee will not be capitalized. It's not a directly attributable cost that will bring the asset in its condition and location. All right. So this is just another expense, which maybe could just be put as maybe employee benefit or something. Just another expense to train the employees, just another training expense. So this one should be expensed and not capitalized. This one should be expensed, so it's not part of that cost. Okay, so therefore the total cost will then be, so we're saying 1,575,000 plus 18,500. This will give me 1,593,500. Okay, so that is my cost. And then I want to calculate my accumulated depreciation so that I can get my carrying amount. So I'm just going to jump a bit. Carrying amount at 30 June 2023. So it's been years. We have moved. So we are now here, right? So I need to calculate the depreciation in between. Okay, to do that, open the big brackets. I have my cost, which is now 1,593,500 minus the what is it called? The residual value. The residual value was given. Let me go back to the question. The residual value was given as 185,000. 185,000. 185,000, and this was over 7 years. It was over 7 years. And then how long have we had this? So let me go aside to calculate how long we've had the asset from the time it was available for use until now. How long are we going to have to depreciate this? So on the side, I'm going to do it here. So it was available for use since September 2020. So September 2020 to June 2021. That will be year one, right? And then after that, we're going to have July 2021 to June 2022. Then we're going to have July 2022 to June 2023. So this is where we stop. Right, so September to June, that will be September, October, November, December, January, February, March, April, May, June. That's 10 months. That's 10 months. Then these other ones, they are 12 and 12. That's a full month. All right. So 10 plus 12 plus 12. This will give me 34 months. I'll just put M, 34 months, right? Then my total useful life is 7 years. If I multiply this by 12, let me just work with months. I could also work with years if I want to. It's up to me. 7 times 12, that will be 84 months. So 84 months, that's my total useful life. So since the asset was available for use until the end of the current year, guys, remember this is now property, plant, and equipment, right? I'm working on property, plant, and equipment now. IS 16, that's what I'm working on now. All right. Since the asset was available for use until end of June 2023, it has been used for 34 months. Né? So I'm going to say divide by 84. The 84 represents the total useful life, 84, the 7 years, and then multiply this by the months that has been used. So multiply by 34 months. Right, and then close. Okay, so that's how long we've had used the asset. So we're saying 1,593,500 minus 185,000. Then divide by 84, multiply by 34. Okay, so for my accumulated depreciations, I'm getting 570,107. Okay, you round off everything to the whole number, no decimals. Okay, then from there, I can get my carrying amount. Now I'll use my cost minus my accumulated depreciation to get my carrying amount. Right, so 1,593,500 minus 570,107. My carrying amount will be 1,023,393. That will be my carrying amount at this point. Now, normally we're supposed to have stopped here and say, all right, this is our carrying amount. Let's go ahead and put it there. However, they did mention that this was also impaired, the asset was also impaired, and they gave us a recoverable amount. So let's go check out the recoverable amount there. Right, so my recoverable amount here it says the recoverable amount of the packaging machine was estimated to be 950. So guys, if the recoverable amount is less than the carrying amount, that means there was an impairment, right? So we're going to account for that impairment here as well. So my recoverable amount as at 30 June 2023, this actually becomes the carrying amount because the asset has been impaired. So the recoverable amount is 950,000, right? Meaning we have an impairment loss of the packaging machine only, not the CG unit. So impairment loss. Okay, so we take our 1,023,393 minus 950,000. So this is giving 73,393. That's my impairment loss on packaging machine. So with packaging machine, we can then say we have come to the end. So the carrying amount becomes its own recoverable amount. So right, so we'll take the 950 here as part of the carrying amount of the packaging machine. Right, so let me pause a bit, guys. Let me pause a bit. Do we have any question at this point? If you have any question concerning the packaging machinery that I've just calculated now, please write on the comment section. Naomi, I have a question here. I don't understand. How did you calculate this? Whatever the case is, write it down on the comment section and I will get back. I will answer you immediately. I am available. Like I said, this is a pre-recorded class because we wanted to avoid live where we can have network issues. As you can see, guys, I am sharing the slides and using OneNote as well to write. So I needed to use an app, and those softwares becomes very heavy and makes the class heavy if it's just like live. So that's why I decided to premiere it, right? So if you have a question, please write on the comment section. Okay. Again, if you are just joining us, please make sure you have subscribed. Make sure you like this video. Make sure you share this video with somebody. Most importantly, subscribe and like the video. Okay, I'm waiting for your comments, guys. 2 minutes. Please put your comments on the comment section. Put your questions on the comment section. If you are enjoying this class, just tell me, yes, Naomi, I'm all good. I'm all good. I understand. Let's continue. All right. You can put a comment like that. All good. Let's continue. And if you have a question, then you put it there and I'll be answering you guys as you're putting in your questions. Okay. Do that quickly. Let's do that. Let's do that. Let's do that quickly. Let's do that quickly. Right, let's continue. Now, so that was the packaging machines. And now let's look at inventory. What is being said on inventory? I'm going to go and read on inventory. So inventory is note number 2. Inventory says that on 30 June 2023, the carrying amount and the net realizable value of inventory amounted to 48,000 and 45,000 respectively. So guys, we all know according to IS2, all right, according to IS2, inventory is measured at the lower of carrying amount or net realizable value. So I'm just going to go on my calculation side of things again. Okay, so this is calculation 3. So inventory is equal to the lower, sorry, why am I getting higher? The lower of carrying amount. So the carrying amount is 48,000 and then net realizable value NRV is 45,000. Therefore 45 is the lowest. Okay, so that is it. So for inventory, we don't have to do much. We're just following the instruction. Whichever is the lowest is what we bring in here. So we have 45,000. Right, then lastly, the delivery vehicle. So I'm going to call this calculation number 4. Here, I want to focus on delivery vehicle. Okay, we're gonna go and read the delivery vehicle and bring in our stuff here. All right. So what is being said on delivery vehicle? Let's go have a look. Okay, so it says Bevmart Limited purchased a delivery vehicle which was specifically customed for the transport of flash frozen vegetables on 30 April 2021. That's when they bought it, at a cost of 723,850. On acquisition date, the delivery vehicle was wrapped at a cost of 95,000 in a specific Bevmart Limited branding. So it was branding cost to assist with public brand awareness, more like marketing, like promotion, right? Advertising, promotion, marketing, right? The delivery vehicle was available for use as intended by management, as well as brought into use on the 31st of May 2021. So that's a very important date here, 31st May 2021. Okay. On acquisition date, the delivery vehicle had an estimated useful life of 850,000 kilometers. So in other words, it actually uses units of production method. So we're going to use the kilometers to calculate depreciation. No residual value was allocated to delivery vehicle. On 1 July 2022, which is the current year, the year starts in July 2022, ends in June 2023. Management of Bevmart Limited estimated the remaining useful life of the delivery to only be, now remember this is already in the beginning of the year, to only be 650,000 kilometers. Okay, so there's a change in estimate, but this is already in the beginning. Remember, change in estimate must always be done in the beginning of the year, even if you're told at the end of the year. All right, but this we're being told in the beginning, so we just take it through. Due to the bad road conditions in South Africa, that's the reason. The delivery vehicle traveled 135,458 kilometers and 123,500,000 kilometers for 2020 and 2023 financial year respectively. So the respectively, I said fully, respectively, right? So basically, this is how much they actually traveled during the year. Also note that the useful life changed in the current year. There was a change in estimate. The recoverable amount of the delivery vehicle as at 30 June is unknown. So we can't say that the vehicle was impaired because the recoverable amount of the vehicle was impaired. Now, let's get going. Let us do the calculations for delivery vehicle. Okay, so again, we're going to calculate our cost. Okay, so I want to know my cost as at the time it was available for use, which is 31st May 2021. That's when it was available for use. Then let's look at the purchase price. And then they had branding cost or advertising. Let me just say advertising or branding costs. Okay. So the purchase price being 723,800. Okay, this is going to be capitalized, but the advertising cost is not an asset. It's not a directly attributable cost. So it should not be capitalized the asset. This is simply going to be expensed. It's just another expense, né? This one is just another expense. So at the end of the day, the cost is only what the purchase price. So we have here 723,800 being my cost. Okay. So from that time until from that time until we go to 2022, we are going to, they've been given how much kilometers has been traveled. So that's what we're going to work on now. We're going to calculate our depreciation up until last year. So carrying amount at 30 June 2022 until last year, right? That's what we want to do. Okay, so in between the depreciation day is 723,800. There's no residual value. All right, this multiply by, or you can say divide by, the total useful life was 850 kilometers, 850,000 kilometer, multiply by the amount used during the 2022 financial period. It was 135,458 kilometers. Okay, we read all of these things together now. So yeah, that was basically it before the change. So before the change, it was 723,800 over 850,000 times 135,458. Okay, so my depreciation or accumulated depreciation is 115,354. That's my depreciation. Right, from there, I'm able to calculate my carrying amount. So minus this from 723,800, which was the cost. The carrying amount in by 30 June 2022 will be 608,496. Okay, so that is that. Then we now get into the current year where there was a change in estimate. Reason being is they re-estimated the useful life of the delivery vehicle. So because of that, I'm now going to the carrying amount at 30 June 2023. Right, then we now calculated the depreciation for the current year. So this would be, because of the change in estimates, I will use the carrying amounts. Carrying amounts. So 608,496. That's the one I'm going to use. All right. Over the new useful life is now 650,000 kilometer. Multiply by the kilometers used during the year is 123,500. Okay, so that's how much it would be. So we take 608,496, divide it by 650,000, and then this is a zero, né? 650,000, and then multiply by 123,500. Okay, so depreciation for the current year is 115,614. Okay, so the carrying amount, then I'm going to take the carrying amount of the previous year minus the depreciation now to get the carrying amount at the end of the year. So we're minusing this from 608,496. Okay, so my carrying amount of delivery vehicle is 492,882. Okay, so for delivery vehicle, we are done. So we are going to take this at the top. Guys, all these explanations that I'm doing here, you're going to have to discuss it in words as well. You're going to have to discuss it in words. If you have to write all of these words, we're going to basically be here for longer. All right. So yeah, that's that. Then I go back to my main calculation, which is calculation 1. And then I'm bringing in my figure. So the carrying amount is 492,882. 492,882. So that is that. Then that's all my 4 assets within the FF division. Now I can calculate the total carrying amount of the FF division, the cash generating units. So it's 125,000 from goodwill plus 950,000 950,000 as my packaging machine, plus inventory, which is 45,000, plus delivery vehicle, which is 492,882. So my total carrying amount of the FF division is 1,612,882. Right, so now it goes back to our principle. Now it says impairment occurs when the carrying amount exceeds the recoverable amount. So if you look at it very well here, my carrying amount is more than my recoverable amount. Therefore, I'm actually going to have an impairment loss. So now the difference between these two, the difference between this and this will give me an impairment loss. So 1,612,882 minus 1,450,000. This gives me an impairment loss of 162,882. This is negative because this is bringing the amount down. Right, so this is it. This is where we are. We're able to calculate our carrying amounts. The recoverable amount is given. So carrying amount, recoverable amount, impairment loss is given. Now we have to look at the part of allocation. Right, so let me add here impairment loss allocated. Allocated. How do I then allocate this total impairment loss of the FF division to the individual assets? Now, please pay attention. It goes back again, according to IS-36, which is impairment loss. According to impairment loss, if we have in a CGU, in a cash generating unit, if we have goodwill in a cash generating unit or even in a disposal group, we have to allocate it in full. That's the rule, guys. This is one of the things you're going to mention in your discussion. The goodwill must be allocated in full. So I'm taking the full goodwill amount, 125,000. This is allocated so that at the end of the day, nothing is left as carrying amount for goodwill. Right. Also, we have to look at the assets that are within the scope of IS-36. So which will be like your PPE, your intangible asset, those ones will be within the is it IFRS 5 or IS-36 scope. But inventory, investment, liabilities or anything like that, those ones are not part of the scope. So we can never allocate inventory, investments, what's the other one, liabilities, any of those that are not PPE, intangible asset or investment property. Any other asset, you are not going to allocate them. All right, so there will be no allocation for inventory. So I will take my amount as is because this is minus nothing. Sorry guys, I want to use red in between here. This is minus nothing, so therefore at the end of the day the figure remains as 45,000. Okay, so the only items that are left for allocation, which are part of the scope of IS-36 or IFRS 5, we're not doing IFRS 5 today, IS-36, is that packaging machinery and delivery vehicle. Okay, however, the packaging machine has already been impaired. Remember, we had calculated impairment loss for the packaging machine already. Guys, these are the things I'm going to write on the discussion. The packaging machine has already been impaired. Therefore, we will no longer allocate further impairment. No further impairment will be allocated because the individual asset has already been impaired. Okay, so because the individual asset has already been impaired, this is also not going to be impaired. Not because it's not part of the scope. It is part of the scope of IS-36 of impairment loss. However, the fact that it was already impaired, there will be no further impairment allocated to it. Okay, so the full amount goes as also part of the carrying amount after impairment. So we take the amount as is. So the only thing left here now is the delivery vehicle. So there's no need for me to even apportion. All I need to do is take out the goodwill that was fully impaired. So once 162,882 minus 125,000, this will give us the impairment amount left, which is fully going to delivery vehicle. Okay. It's part of the scope and it was not yet impaired individually. So we're taking the full, the remaining impairment to allocate it to the delivery vehicle, right? So therefore, minus 492,882. So here we are left with 455,000. Okay, let's confirm that we get the recoverable amount. So we'll take 950,000 plus 45,000 plus 455,000. And voila, that gives me the 1,450,000. This is how it's supposed to have been calculated. This is the correct way of calculating it. Okay, so I didn't show all the calculation, but I did explain every other thing. The carrying amount, we calculated individual assets and brought them here. Impairment loss, I calculated from here because I had my carrying amount already and my recoverable amount. Carrying amount minus recoverable amount gives me my impairments. Then the allocation also we did here. Right here, we didn't show it separately. So what did I do? Fully allocate goodwill, then minus the goodwill from the total that is left. It was 37,882. This was supposed to have been allocated between packaging machinery and delivery vehicles because these two PP items are part of the scope of IS-36. However, the packaging machine was already impaired, so no further impairment allocation was needed. Right, so this is how it is done. This is how they wanted this to be done. Guys, I know I did a lot of things, so I'm gonna pause again. I'm gonna pause again, guys. It is question time. It is question time. Right, let's talk. Put your questions down on the comment section. I am going to answer all your questions. Put your questions down on the comment section. Whatever it is that you got confused or you want me to maybe clarify, please put it down on the comment section. Now, for those of you who understood everything, just tell me, Naomi, we're still together, all in order, we can move on. Say something like that. Just put a comment. Put a comment saying, Naomi, we're still together. All clear, let's move. Okay, something like that. Say something like that. Right, let's comment, let's ask our questions. You can take some water, a cup of water, a bottle of water, and drink water before we continue. Guys, remember it is revision, so I'm taking my time to make sure that I give you guys the right thinking process. If you can think right, then you'll be able to pass your assessments that's coming. Okay, put on your question, guys. Put on your questions. If you're fine, just write Naomi, all is in order. I'm all good, all clear. Let's continue. Okay, and if you have questions, you put it down. Now, for those of you who are just joining us now, if you're just joining us, please make sure you subscribe to the channel. Make sure you like this video, very important. Like the video and share this video to the accounting groups you're coming from or friends or people that you know that need this video. Please do that if you're just joining. Like, subscribe, share the video. If you have done it already, it is fine. I'm talking to the people who just joined the class. Okay, so with that being said, now that we know our correct calculations, have gone through the calculations, let's go and see what did the junior accountant did. Now, remember the question was discuss. So this is where you're going to discuss now what was done by the junior accountant. This is the information given to us and we applied all the information. What did the junior accountant do? Let me use yellow for this. Okay, so let's go. As part of the financial year procedure, the junior accountant of Bevmart Limited prepared the following two calculations. So you prepare the impairment loss of the FF division calculation and the allocation. So let's look at the impairment loss. Ne? So what is good, we tick. What is wrong. Ne? So let's go. First thing first is calculating the carrying amount. So the goodwill carrying amount 125. This one is correct. You guys, you have to mention this in your discussion. That the junior accountant correctly included, first of all, it correctly included goodwill as part of the assets in the FF division and used the correct amount. Secondly, it correctly included packaging machine in the FF division calculation of carrying amount. However, the figure is incorrect. Why? The correct figure is here. It's 950,000, the one we calculated. So you must now talk about why is it wrong. Why is this figure wrong? Okay, so let's go. This says calculation 1 here. Ne? This their 1. This is where they got it. So what did he do? You come here and say the total amount is wrong, and then you talk about the calculation. So the junior accountant was right to put the purchase price. It was right to put the, what is this, delivery cost, because delivery cost is directly attributable to the asset. And then he included, what was this called? I think we did it here. It was training fees. So then the junior accountant incorrectly included the training fee as part of the cost of the asset. So this was an incorrect amount. It's supposed to have been expensed and not capitalized. These are the things you are saying in your discussion. All right. This figure was supposed to be expensed and not capitalized. Okay. According to, what is this? IS 16 PPE, property, plant, and equipment. Right. So this was incorrectly done, making the total cost to be incorrect. The junior accountant correctly used the residual value that was given. And this is the useful life. Remember, we also did that. He took the useful life multiplied by 12. He gave 84 months. This was also correctly done. Please mention that. And then multiply by 34 months was also correctly done. We did it together. So the problem was the cost that made the total carrying amount to be wrong. These things that I've just said, these are your discussion. Write them in words. Okay, let's go to inventory. So inventory was correct. He put the inventory correctly, classified it correctly as part of the FF division, but the figure is wrong. The figure is wrong, right? Why? They were supposed to have used the lowest of the net realizable value and the carrying amount. So the net realizable value was 45,000, carrying amount 48. So this is the incorrect figure. It's supposed to have been 45,000. Okay. So you would explain that in your discussion. The delivery vehicle was incorrectly included as part of the FF division. However, the calculation is wrong. Based on the one we did, this is wrong. So how was it supposed to be calculated? They did say number 2 is where they calculated. So let's go there. So the junior accountant correctly used the purchase price, but incorrectly included the branding. This branding is just another advertising cost. It's supposed to be an expense, not added here. So that was the problem, right? So making the cost to be wrong. Then it's correctly used the useful life before the change in estimate, and correctly used the kilometers traveled during the 2022 financial period, right? Then also correctly used the new, what is it called? The new re-estimated useful life and the kilometers traveled during the year. That was correctly done. However, because of change in estimate, you cannot use the cost you are supposed to use. Not because this cost is wrong because of this, not because of this. This time is wrong because there was a change in estimate, so we are supposed to use the carrying amount and not the cost again. Okay, so you mentioned that the junior accountant was meant to use the carrying amount and not the cost. So that is what made the figure to be wrong. So overall, the carrying amount is wrong because of all this that we have noted above. Then the junior accountant incorrectly put the recoverable amount correctly included the recoverable amount as 1,450,000 as it was given. This is correct. The impairment loss is then incorrect because of all the above mentioned. Right, above mentions, whatever we mentioned above makes it incorrect because the carrying amount is incorrect, therefore the impairment loss is incorrect. Right, so these things that I've said here, these are the things you're putting in your discussion. Okay, then we now go to the allocation. So that's the calculation. Now we go to the allocation. On the allocation, first of all, goodwill. So what did he do? He apportioned the goodwill. This apportionment is wrong. Goodwill is supposed to be allocated fully. So the amount allocated is wrong. It's supposed to be full amount. Yeah? Packaging machinery Also, we did say the reason why we are not allocating an amount is because it was already impaired, right? We already calculated an impairment. It was already impaired on its own. Therefore, there was no need for it to be impaired again. So all the things I was saying here is now being proven there. So you will now mention this in your discussion. Let's go to inventory. Inventory is out of the scope of IS-36, out of the scope of impairment laws. Therefore, you do not put any allocation to it. Okay. Then for delivery vehicle, although these their figures and whatnot are wrong, but it was right to allocate. The allocation to the delivery vehicle was correctly done. However, the figure is wrong. The amount is wrong, but the allocation was correct. Okay, and that is it, guys. That is actually comes to the end of our question A. So that was question A. That was everything that you actually needed to do in A. So I showed you guys, in case you're just joining us, that's the format of your discussion. Give us an intro in line with what is being asked. I give an example. For example, according to IS-36 impairment loss, an asset is impaired by its is impaired, not by, when, sorry, I meant to say when. When, this is when its carrying amount exceeds its recoverable amount. In the case of a disposal group or cash generating unit, impairment loss calculated will be allocated to asset within the scope of IS-36 or IFRS 5. In this case, we're dealing with IS-36 because this is just a cash generating unit. It's not a non-current asset held for sale. It's not a disposal group, which is IFRS 5. Yeah? It's not that. So I gave an example here, and then the discussion explained to you guys how the discussion should done, should be lengthy. Also look at the mark allocation so you put more onto it. And then conclusion is to tie up everything at the end of the day. Right, so then we went on to do the correct calculation before we can compare what the junior accountant did incorrectly. So I did the calculation with you guys. I explained every step, even the calculation, the further calculation we did. We explained every step. And then from there, we came here. Now we looked at what was done incorrectly and what was done correctly. You tell us what is correct, what is incorrect, what is correct, what is incorrect. Okay, that's how the discussion is, and that's how you get your 24 marks. Right, remember writing words, don't just focus on the calculation. They want the wording here. They wanted you to also include the calculation, right? But more should be on the discussion. Okay, so that one was done. That's our question A for 24 and 25 marks. Done. Right. Before I move on again, let's put questions on the comment section. What is the part that you missed? What is that you didn't understand? Where do you want Naomi to put in clarity? Please put on the comment section. I will be able to answer you. Put all your questions there. And those of you who are still fine and be like, oh, Naomi, I understand. Everything has been happening. I'm clear. All clear. You just write all clear. I understand. Let's continue. Okay, just say something like that on the comment section. Let's keep this class active. Let's be active on the comment section. Let's put our comment down, you know, so that YouTube will be able to push these videos for more students to join. Okay, so again, if you're just joining us, please subscribe, like, share, and put on a positive comment. Okay, if you're just joining. If you have already done so, it's okay. For those of you who haven't done so, please do not be in this class without subscribing into the channel and liking the video. Like, please. Okay, so that part is done. Put your comments, drink some water. Put on your comment. Okay, I'm answering everything on the comment section. All right, let's go. Let's go to the second one. It then says, disclose the profit before tax note in the annual financial statement of BevMart Limited for the year ended 30 June 2023. Include all the relevant disclosable incomes and expenses item resulting from the information given in the question, together with disclosure regarding change in useful life of the delivery vehicle. Okay, so let us get going. Now we're gonna do we're now gonna do the notes. we're now going to do the notes, profit before tax notes. This includes also the FF division that we have done. So this is not particularly for the other division. This is just the full question. Everything that needs to be included is also going to be included in here. Right, so I always tell students before you go to read new information, first of all, use the old information that you already have and bring it in here. Okay, I want to see where can I put my answer. Okay, it's okay. Let me just go down. I wanted to put this next to yeah. Let me put it next to it. It's not gonna be too all over the place. Okay, that's okay. Let's put it down. I'm just trying to decide way to write it. That's all I'm doing here. Never mind. Okay, B. So B, we want to do a note. This is for Bave Mart Limited. I want to do notes for the year ended 30 June 2023. Right, and then note number 1, this is the profit before tax note. Right, so include all the disclosable incomes and expenses that you see available. Usually a question usually have more expenses than income, almost all the time. Okay, I'll put my R there. And then here we're going to start income and expenses. I'm not expecting a lot of income as usual. It's usually more expenses. All right, so yeah, that's something like that. Something like that. So let's first of all start with what is it that we have there. What is it that we have there? Okay, let's talk about the inventory written down. Remember it was written down to its naturalizable value. So I'm going to start with that. Inventory written down. Write down. Okay, remember this, they initially included 48,000 and then it was written down to 45. So the difference is basically 3,000. So that 3,000 is going to affect cost of sales. This is going to affect cost of sales. So 3,000 is my expense. Okay, that's the first one. What else did we have? We had impairment. Impairment, yeah, we had impairment. Yes, we had impairment loss. We had depreciations. Impairment loss, depreciation. What else? I think that's it. Remember the other ones like your training fees happened long time ago last year. The other expense also happened long time ago. So when we're talking about profit before tax, it has to do with the current year. This is another place that students makes mistakes. It has to be in 2023. Did it happen in 2023? If not, do not include it here. Only the 2023 one. Eh? So let's go. We had impairment loss. We have impairment loss of the general, the FF division, the CGU, and then we had impairment loss on the packaging machine as well. So the overall impairment loss on the CGU, cash generating unit, is 162,882, and then the other one is 73. It's 73,393. Okay, that is so all this calculation didn't go to waste. We didn't just waste, we're using it again. Yeah, so My impairment is the overall impairment 162,882 plus, and I can even allocate where this is coming from. This is coming from calculation 1, and then we have 73393. This is coming from calculation 2, if I'm not mistaken. Right. So yeah, and then the total add together 162,882 plus 73393. This is giving getting 236,275. So that's my impairment loss. Now, actually, I shouldn't have totaled it as yet. Okay, but anyway, let me just leave it for now because we haven't read other information. There may be other impairment loss that we need to account for. But yeah, so if there is, we'll just come back. Okay, another thing we had was depreciation. We had depreciation. Okay, so depreciation, like I said, there may be other assets also that has depreciation. So what I'll do is for now, I'll leave my depreciation open. So we start from packaging machine. Depreciation for 2023 for the current year. Depreciation for the current year is the one that is okay. So it actually has to be calculated. Let me see. Because the one that we have there is the accumulated depreciation. So we'll have to calculate it again. Okay, let's do this. So let's call them by name. It has to be the one for the current year. It has to be depreciation for the current year. I'm insisting for the current year. So I'm going to do this packaging machine. The depreciation we are calculating again because the one we have includes other years. So basically it's 159,500 minus 185,000. Okay, that's my over 7 years or 84 months. So it's it's 159,500. That was the cost minus the residual value was 185,000 over should I use years or okay, let me just use month. 84 months times 12 months. Okay, that's basically it. So that I can get depreciation for the current year, not just any depreciation for the current year. So let's calculate 159,500 minus 185,000. This divide by 84, multiply by 12. So I'm getting 201,214. 201,214. So I'll put them in bracket to get the total 201,214. Right, perfect. Okay, so that's for packaging machine. We also had depreciation on the delivery vehicle. Delivery vehicle. Okay, so on the delivery vehicle, let me go back to the calculation. It's this one. So this is 115,614. Okay, 115,614. That is my depreciation calculation. Okay, so remember there was also change in estimate. There was also change in estimate, so we need to look into that as well, take that into consideration, the change in estimate. If I had to calculate the original depreciation, how much would it have been compared to now? So first of all, let's take the total. The one for now, the one for now is 115,614. 115,614. So delivery vehicle. So we'll say this one is new method. Mm, 115,614. Okay, then if I had to recalculate this, let me use a different color. So if I had to use the original, the old method or estimate, all right, then I have to use, if I had to do that, I will calculate it this way. I would have used my cost, not the carrying amount. I would have used my cost, which is 723,800. Right, I would have used my cost, and then at that time the useful life was 850, sorry, the useful life was 850, and then but use the current year's kilometers traveled, which is 123,500. So I would use my original cost 723,800, use the original the old estimate, which was 850,000 kilometers useful life, and then the current year's kilometers traveled, which is 123,500. Okay, so it would have been as follows. The calculation would have been 723,800, which is my cost. This was calculation what? Calculation number 1, 2, 3, 4. Calculation number 4. Calculation number 4. This over the 850,000 kilometer multiplied by the current year's kilometers traveled, which is 123,500 kilometers. Okay, then we'll have then the change in estimates here. Very important. Okay, so let's calculate this figure. So 723,800 divided by 850,000 kilometers multiplied by 123,500. So this is 105,164. 105,164. That would have been my depreciation if there was no change. But because of that, the difference now is my change in estimates, is the difference between the depreciation, the new one versus the old one. Okay. So the new depreciation is 115,614 minus 105,164. Therefore, the change in estimate does an increase of 10,415. Please take note of this. This is very important in case you get something similar to also indicate on the delivery vehicle that the change in estimate took place. All right. So yeah, let's get going. Right, so now that we got our depreciation, those were the only two items that we had there, and then we had also put our inventory rate down, written down, and impairment loss. So those are basically all that I see for now in our what is it called? In the calculation, the FF division that we just did. These are the only expenses that I'm able to see for now. So let us now go and check out the new information that we have and also look further for more incomes and expenses items that we can come across. Yeah, so let's do that. Let's go to the new information and read through them as well. Okay, so the FF division is done. I'm going to go to the monitoring software, and then we look at the preservative formula. Okay, so what's happening here? Monitoring software, it says BevMart Limited purchased an artificial intelligent monitoring software on the 4th April 2023 from an international software developer. So this is a purchased intangible asset, basically. At a cost of 185,000. The full invoice amount is payable by BevMart Limited on the 31st August 2023, which is after year end. The software will be used to monitor the speed and driving habits of BevMart Limited drivers. The software was available for use, very important, available for use as intended by management on 1 May 2023. On acquisition date, it was established that the software has an estimated useful life of 8 years and no residual value was allocated to it. The speed and driving habits report created by the monitoring software, if found favorable by the insurance company, will be used to calculate the monthly insurance rebate. The following exchange rates are applicable, right? So guys, this is another topic, foreign exchange transaction, effect of changes in foreign exchange transaction. This topic is going to be done in the next assessment. Going to be done, be covered in the next assessment, but it is part of this question, so I am going to work on it, but you guys don't have to worry about that much. Just let's rather focus on the intangible asset that we have. So what do we have here? We have purchased an intangible asset during the year. So in other words, we have to calculate the what is it called, amortization, not the depreciation but amortization. So we have to calculate amortization of this impairment of these intangible assets, and also we have to also look at the effect of changes in foreign exchange transaction, which I did say you guys didn't have to worry about. You guys didn't have to worry about that one. Anyways, let's get going. So what is my cost? First of all, we bought this in US dollars, and then therefore we have to change this, translate this into the South African rands, and then we are told on the day it was purchased, which is the transaction date, 4th April 2023, the amount, the price in rands was actually 15 rand 80 per the US dollar. All right. So that's what we'll keep in mind. Let's go do this calculation. I just want to do the calculation this side. What was my last calculation number? Calculation number 4. Calculation number 4 was my last calculation number. So I'm going to start with calculation number 5, where I'm going to do the monitoring. Yeah, let me do it here. Calculation number 5, where I'm going to do the monitoring software. Okay. Number 5. Monitoring software. So we move from property, plant, and equipment to intangible assets, right? But the method that I apply is basically the same method, all right? So the cost, I'm going to do the cost at the transaction date, which is the 4th of April 2023, all right? How much was my cost at 4th April 2023? Remember, this was given in US dollars, so it was 185,000 US dollars, and on that date the transaction rate in rands was 15 rand 80 cents. So that's how we'll be able to get our cost of the assets. So we're basically saying 185,000 multiplied by 15 rand 80 cents. This will give me 292,300. So that becomes the cost. Is it 2? Oh no, it's 2 million. Sorry guys. It's 2 million. I just realized there's another a zero. Let me just write this properly. It's not 200,000, but it's 2 million. So let's write this properly. 2 million 923,000. So it's a million. Right. Then we now have to calculate the amortization. So to get to the carrying amount at 30 June 2023, I have to then calculate the amortization, not depreciation, but amortization. This is calculated on the intangible assets. So my amortization will be as follows. There was no residual value. We're told that the useful life is 8 years. There was no residual value. So it's 2,923,000 over 8 years. Then we need to know how long have they used it. Right. So remember, this is the transaction date. The 4th April 2023 is the transaction date. I need the useful, the available for use date. So according to this, the software was available for use as intended by management on 1 May 2023. 1 May 2023, and the year ends in June. So that is May, June, 2 months only. We're calculating this for 2 months. Right. So 2,923,000. This divide by 8, multiply by 2, divide by 12. This is giving me 60,000. 60,896. 60,896. That's how much we are getting. Okay. As our amortization. And then we can now calculate the carrying amount. So we minus this from 2,923,000. This will give, I actually don't need the carrying amount. I just needed the amortization. So if you're doing an exam, just do the amortization and move on. You don't have to give calculations that are not needed in the question. But for the sake of the class, I'm giving you guys full calculation because you don't know what is going to be asked on the next question. I want you to just understand everything that you need. Right. Another thing that is important here is, I'll call this calculation number 6, is the effect of change. The effect of changes in foreign exchange transactions. So we either have a foreign exchange gain or a foreign exchange loss. Foreign exchange. So we don't know if it's a loss or a gain. So let's go look at it. What happened? Now, if I'm looking at my exchange rates on April 2023, the exchange rate was 15.80. So I'm going to translate, I'm going to compare these to the exchange rate at the end of the year, which payment is done later. If the payment was done before, I would have compared to payment, but payment is going to be done later. We're still owing them up until August. So at the end of the year, the exchange rate, like I said, guys, this is still going to be done as a topic for the next assessment. I'm just doing it because it's part of the question. So you guys don't have to stress too much about this. Né? Anyways, we're comparing transaction date, April, which was 15.80, compared to the year end, which is 30 June. Year end 30 June. Let me highlight this so we can see 30 June. This is now 15.96. So the exchange rate has actually gone up. Meaning if I have to pay now, I'm going to pay more than I would have paid if I paid a transaction date. So this is a foreign exchange loss. Okay. So I'll be comparing 15.96 and 15.80 to get the foreign exchange loss. All right. So let's get here. Let's get back here. Foreign exchange loss. Okay, so basically what am I doing? I'm taking my amount that is being owed in US dollars, 185,000. 185,000. These multiplied by the difference between 15 Rand 96 and 15 Rand 80. So that difference, then we'll be able to get the total amount that foreign exchange loss that we get. Okay. So start with the small brackets, 15 Rand 96 minus 15 Rand 80, which gives us 16 cents difference. This multiplied by 185,000. This gives me 29,600. 29,600. Okay, so for the monitoring software, these are the only two items that we can find that affect our profit before tax. Okay, so guys, now we take these items into the profit before tax calculation. We will now take them there. So I have amortization and I have foreign exchange loss. So because I can have more than one item, I'm going to just open my amortization and not close it immediately because I can have other items. Okay. So we go to our profit before tax. So my item is 60,896 and also 29,600. Right, let's go. This is the monitoring software. Under my expenses, so I'm still going to leave space for depreciation because there can still be other assets. So I'm going here, amortization. Right, the first amortization I want to focus on is on packaging, or I can just open it. I can just open up. Another way to do this, I can just open up here to say the first one is 60,896. This is calculation number 6. Or was it 5? Calculation number 6. That would be that. That's how I open my amortization. So every other thing will just fall in the brackets. I can do it that way as well. And then I have foreign exchange loss. Foreign exchange loss. The amount we calculated just now. The amount is 29,600. Then you just put the calculation number. You say calculation 7. Let me confirm this amount, these numbers. So it's 5 and 6, not 6 and 7. 5 and 6. Six, and the other one is 5. Okay, so guys, that is it. That is for the monitoring software. Again, guys, same procedure. Please go on the comment section and write down your question. If you had any question regarding the monitoring software, please go and ask on the comment section. All right, and then for those of us who understood everything clear, please just write a comment and say, Naomi, all clear. I understand. We can continue. Please just say something like that there. Say, Naomi, you can continue. We are clear. We understand everything. And if you have a question, put your question there. I will answer you on the comment section. Again, let me use the opportunity again. If you are just joining us, I know that it is live premiere. If you are joining us, you please make sure you subscribe. If you have subscribed already, it's fine. If you haven't, please make sure you subscribe. Make sure you like the video and you share the link of the video with other students in other groups. Okay, please do so. Write your comments, drink some water. We are moving on. Right. Okay, so the monitoring software is done. The next one we're looking at is the preservative formula. Preservative formula. So let's go read what's happening here. What's going on here? Right. During the prior financial year, the management of Bevmart Limited embarked on a research and development project to develop a healthier preservative alternative to be used in the production of processed foods. The research commenced, very important, the research commenced on 1 July 2022 And on 1 September 2022, very important, all the criteria for the recognition of the internally generated intangible assets were met. So this is where development will start. Okay, so development commenced on this date, on September 2022. The development of the formula was completed on 28th February 2023. As you can see that how I'm really hitting on important information. So like the dates are super important when it comes to accounting. Dates are like very, very, very important. Okay, so let's continue. The formula was available for use, right? Then the whole formula, after everything, it was available for use as intended by management on 1 March 2023. The formula had an estimated useful life of 10 years and a residual value of nil was allocated to it. The following costs were incurred during the research and development phase. Okay, so these are the costs that they incurred from 1 July to February. These are general administrative costs. This should not affect much general administrative costs because it's just your general expenses. This is like your fixed cost. All right, that one is like your fixed cost, so you can ignore that. Then we have water and electricity, salaries, depreciation, and vehicle. Okay, let's continue. Number 1, water and electricity. Total water and electricity cost incurred during the period of 1 July 2022 to February 2023 amounted to 164,550. The costs were incurred, very important, incurred evenly, so it was the same throughout the period. Okay, that means you can actually apportion it, you can spread it out. Okay, that's the first one. The second one, 3 laboratory technicians, all right, which are permanent employees of BevMart Limited, worked full-time on the research and development of the formula in 2023 financial year. Each laboratory assistant is paid a monthly salary of 55,000. BevMart Limited's permanent employees receive a 6% increase on the 1st of July each year. So the 55,000 already includes. So this one is just for the next financial period, there will be another 6% increase. All BevMart Limited's permanent employees took 15 days annual leave during the current 2023 financial year. Okay, this one is now employees benefits being introduced here. I will just work on it, but you guys don't have to worry too much. It's going to be a topic on the next assessment. Right. Once development of the preservative formula was completed, these 3 laboratory technicians started a new research project. Okay, so we're done with them. So that's salary, that's one expense. We are coming back. I just want to read everything, then we'll come and answer once. The laboratory equipment was used for period 1 September until 31st August 2022 during the development of the formula. The total depreciation on the laboratory equipment for the full 2023 financial year, which you can assume has been calculated correctly, amount to that. So this is the total depreciation. The parts that it was used for development, research and development, has to be capitalized to the cost of the asset. The part that was not used for research and development can be accounted for as a normal depreciation. Okay, so yeah, that's the one I was saying. Okay, this is one of the things that has to be added to the depreciation there. Then the research and development division of BevMart Limited donated a brand new SUV to an employee of the Department of Health who will assist BevMart Limited to ensure the approval and classification of their new formula as healthier and safer than any preservative currently available is obtained. The vehicle was purchased on 1 February 2023 at a cost of 1,150,000. Okay, the vehicle was delivered to the employee of the Department of Health on acquisition date On acquisition date, it was determined that the vehicle has an estimated useful life of 5 years and no residual value has been allocated to it. Okay, so this reminds me of the last question that we were talking about, the ethical considerations. Why did they donate a car? This looks to me like a bribe, because they're saying they want this employee to assist them to classify this formula as healthy and safer, and then they give the assistant a car, a brand new SUV. This is a bribe. Guys, accountants, please stay away from this now, guys. You're studying hard to become what you are, so that you will contribute positively to the society, not to engage yourself in bribery activities and all that. Please stay away. If you want your career to die and you want to go to prison, try this. Don't even. Okay. So yeah. Let's continue. Then additional information. BevMart Limited is the following accounting policy. Machinery. Oh, this we're supposed to have read this long time. Machinery is accounted for in accordance with the cost model. Depreciation provided for straight line method. Vehicles accounted for in accordance with cost model. Depreciation provided for on the units of production. We already picked that up when we're doing it. Intangible assets also accounted for in accordance with the cost model. Amortization is provided for on the straight line method. Inventory, inventory is carried at lower of its carrying amount and net realizable value according to IS2. So in case you didn't know this when I did it earlier, please take note that this is it. Okay, in case you didn't know where this is coming from, at least you see it was written even in the question. Then here, changes in accounting estimates are accounted for in accordance with the reallocation method, which I think we did already there. The reallocation method, where you would show the portion that belongs to the current depreciation and the change in estimates. Okay, right, I think that's basically it. Right, you may ignore the implication of public holidays. Oh, very important. Ignore the fact that there could be a public holiday, because they did say they have 365 days. So that's very weird. Which company works 365 days? Anyways, the leaf cycle of BevMart Limited is from July to June, same as the current financial period. All amounts are material. You may ignore implication of VATs. Anything that has to do value-added tax, you can ignore that. Okay, so with that being said, I think we've read through the research and development. So we're gonna have to calculate. We're gonna do calculation on the research and development section, and then we are going to find the cost and also be able to calculate the what is it called, the amortization on the research and development. Okay, so let's get working. Number 7, research and development, R&D. Okay, so be able to do the research and development, one needs to get the timeline correct. Without the timeline, you are basically in trouble. Okay, so this one was for the preservative formula. Let me just write in case somebody will forget. Preservative formula. Okay, so we have to get the timeline out of the way. Okay, so first thing first, my year begins in 1 July 2022, and the year ends in, I'll just push this a bit further, then the year ends on 30 June 23. So that's my year end. Okay. Then we were told that research began immediately on the beginning of the year. Immediately at the beginning of the year, the research began. So on this period here, let me use, I don't know what color to use even. Let me use blue. So starting from here, all the way to 1st September. August, September, let's say here. 1 September 22. And then it was completed 28 February 2023. somewhere here, 28 Feb 23. Okay, that's available for use on 1 March. Let me just do this here. 1 March 23. Okay, so let me get my stuff going. The timeline is very important. If you don't do it, you may just, mix up things. Right, so from here all the way to here, this was what? Research period. Okay, so research commenced here. My research commenced. And then from there, that period there, development in this period, development commenced. Commenced. And then in here, in this period here, development ended, completed, development is completed, development completed. Right, so from here to here is my development period. There to there is my research period. So how long did my research take? So it's July and August, 2 months only. So my research took only 2 months. And then my development took, so it's September, October, November, December, January, February, 6 months. It took 6 months for development. Right. So overall, my research and development, both of them took 8 months to complete. Both research and development took 8 months to complete. Right. Then the asset was available for use on this date. I'll just say AVU, meaning available for use on that date, and that's my year end. I think I've put all the dates that are necessary there. Now, what do I need? I want to calculate the amount that will affect my development, all right? Because under the development period, that's those costs, any expenses incurred under the development period becomes the cost of the asset, is capitalized to the cost of the asset. So I need to know what is the cost of my asset so I'll be able to calculate amortization. All right, any research cost, that one is just another research, it's just expensed as research cost. So what I need my development costs, and yeah, but remember guys, we are doing profit before tax. Oh, we are doing profit before tax. Because we are doing profit before tax, I also have to include my research cost, which is this year. Okay, I also need to include my research cost because if we are doing profit before tax, research cost is also an expense. Right, so let's get going. I'm going to break this between development and research, or research and development. Let's do that. We'll break everything between research. So this is under the research period, and the other is under development period. All right, so let's get going. I want to start from everything. So the first one was water and electricity. Water and electricity. Okay, so let's start first of all. They did say they gave us the overall amount. We just have to split between research and development, right? So the amount was 164,550, 164, 550,000. This just need to be split. So on the research and development, research we use 2 out of 8. Then development 164,550. Here we use 6 out of 8. Okay, so that's basically 164,550 times 2 over 8, and that will give me 41 41,138. Then when you take 164,550 times 6 over 8, this will give me 123. This will give me 123,412. Okay, so that one is done. Let's go to the other one. I think we need to read this again together so we can find the solution. So with water and electricity done, remember what I said, guys, this is general expense, so this should just be your normal fixed cost. Don't include this. Then we come here, 3 laboratory technicians, which are permanent. They are permanent employees of Bevmat Limited, worked full-time on research and development for the 8 months. In the 2023 financial year, each laboratory assistant is paid a monthly salary of 55,000. Okay, so that will be their gross salary. Bevmat Limited's permanent employees receive 6% increase on the 1st of July each year. Okay, so there's an increase, expected increase. All Bevmat Limited permanent employees took 15 days annual leave. So I want to talk about this. Like I said, it's a next topic, but just to talk about it, I don't want you guys to worry too much. Just see what I'm doing. When you do it, finally after this assessment, you guys will understand what I'm saying. So they took 15 days annual leave during the current 2023 financial year. Once development of the preservative was completed, these 3 laboratories started a new research project. So first of all, I want to go back to the beginning. In the beginning, we read something about employees. All right, it says here, it was here. Bevmat Limited operates a 5-day working week. So in other words, you work Monday to Friday, right? All employees are entitled to 20 days accumulative leave per year, which is vesting. So everybody is supposed to take 20 days 20 days paid leave days. Okay, everyone, and they work in a 5 days working week. So this information is very important. Also here they say the current year has 365 days. I also need that information. They did mention at the end day you can ignore public holidays. Okay, so this information I'll need it. Why? Because I need to calculate the what is it called, the accrual, the leave accrual on the days that were not used. So everybody is supposed to take 20 days like I showed you guys in the beginning, but they only took 15 days. So there are 5 days that are not taken, right, which can be used in the next financial period or paid in the next financial period, whatever the case is. So we need to calculate the current year's leave accrual. Okay, anyways, let's first start with their salaries. So there are 3 of them and each of them is earning 55,000. So salaries of laboratory employees, salaries Okay, another thing is I would have loved to say salaries and all that, but then it comes as one word as employee benefits. Salaries and accruals and whatnot are part of that. So, but it's okay. I'll remember it. I'll remember it. It's fine. Salaries of lab technicians. Right. So we first start. It's 55,000 for each. There are 3 of them. For what is this period? Research period, only 2. Then 55,000 times 3, and then times 6 months for the development period. Okay, so that's basically us starting with their salaries, the gross salaries, which is part of the employee benefits. So 55,000 times 2 times 3 months for research is going to be 330,000, and then for development, under development, 55,000 times 3 times 6 months, this is going to be 990,000. Okay, then we want to talk about these the leave accrual. Okay, leave pay accrual. Now this is only done on when the leave days are not taken. When the leave days are not taken. Okay, so please, first thing first, this must be done as an annual. So we have to get the annual figure, and then we have to calculate the salary per day. So this is how we're going to do it. I'm going to first of all do this. Let me do it in red. Do the general calculation to just get that salary per day. And then we will now adjust it or calculate it for the research period and for the development period. Okay, so let's do this. First of all, it's 55,000 a month. So multiply this by 12 to get an annual salary. Then when we are doing the pay accrual in the current year, we must always use the rates for next period. So we're expecting an increase of 6% in the next financial period, which is starting from 1st July of the next financial period. So we are going to increase this by 6%. So I'm saying 6 plus 100, that is 106. In decimal format is 1.06. That's how we increase. Right, so this is an increased salary. This is the total increased salary for the whole year. All right, so this is like an annual salary. Now this annual salary, if I want to calculate per day, if I want to calculate the salary per day, I'm going to take this divide by how many days they worked, right? So we're just using 365 that has been put there. Okay, then they mentioned something about the company using 5 days a week. So basically basically this calculation is basically giving me a 5-day per week calculation. So what I want to do is take this to a full days in a week, right? So I'm gonna say multiply by 7 divide by 5. Okay, so to take me to back to 7 days a week, not 5 days a week. This is taking me back to 7 days per week and not 5 days per week. All right, so what this is gonna do, this is giving me salary per day adjusted. I adjusted it, remember. Okay, I'm just putting a bracket. This bracket does not mean that it's negative, ne? Just wanted to show you guys this is an adjustment. Right, so it's giving me salary per day. Salary per day. So in this case, my salary per day will be, let's do the calculation. We're taking 55,000 multiplied by 12 months, multiplied by 1.06, which is increased by 6%. All right, then divide this by 365 days. So this, we then adjust this figure to be a 7 days a week, you know. So multiply by 7, divide by 5. Right, so my salary per day is basically their salary per day is 2,683. So that's the salary per day, okay, per the employee. Then we go on. Let's now calculate the leave accrual, because all of them only took 15 days, so they did not take 5 days. All right, so we're interested in that. They did not take the 5 days. All right, so let me continue my calculation. Then we are going to take the salary per day, which is 2,683. That's my salary per day. This figure is then multiplied by the days that were not taken. Multiply by days not taken. In a year, they are supposed to take 20 days, but they took only 15 days. So in that year, only 5 days was not taken. Okay, only 5 days was not taken. So that is for the year. We can say this is the figure that was not taken. Right, and then let's now bring into our calculation. So this will now give me the yearly amount that was not taken per the year for the 5 days. Then there are how many of them? There are 3 employees. There are 3 employees, and we now want to apportion this per the month, right? So in a year, it's supposed to be 20 days. They took 15 days and 5 days was not taken for the whole year. So we want to spread this between the 2 months for research and 2 months for what is it called, development. So times 2 divided by 12 for research. Then again, the same calculation, salary per day multiplied by the number of days not taken, which all of them did say take this, did not take 5 days. 3, where am I getting 5? I took the 20 that you are supposed to take in total minus the 15 that was already taken. So we don't have a problem with the leave days taken. We have a problem with the leave days not taken, not used, right? So yes, multiply these by the employees, and then for the development, it's 6 months. Okay. Now, in some calculation, you can see that this calculation will also continue. Apart from it, I think I should just add this column also, because what I'm doing is not just research and development, it's profit and loss, right? So I'm just going to add also a column that says profit and loss for calculations that continues even after development and research. Because remember, they didn't end this at year end, right? So it continues. Others are going to be capitalized. Others are still going to remain as my expense. So I'm going to do the same thing now to say the same calculation, 2,683 times 5 days times 3 employees. Okay. So okay, now I get it. What happened here is that these employees, they only worked on the research and development, and after this they continued on another research and development. So they are still part of the company. Yes, they're still part of the company. They are still the employees of the company. So in other words, what happens to the other months? So we have 2 and 6, that's 8. To make 12, 4 will be remaining. So the 4 is a normal expense. Okay, the 4 is a normal expense. Anyways, let's calculate them. My research, so we should have done the same as with salaries as well. Salaries. Now, water and electricity is not part of this. Let me do all of those calculations I'm talking about in blue. We should do the same with salaries as well, because these people still continue to work. So I'm going to do this in blue. 55,000 times 3 times, so this will be 4 months. Even with salaries, these people are still working for us. 55,000 times 3 employees times 4 months that are remaining. So this is giving 660,000. All right, so yes, please remember that. Let me even put this is very important. And B, somebody else would have left it out. I just think putting it in the box in the table is better, right? So let's start with the other ones. Let's do the leave accrual. So it's 2,683 times the 5 days times 3 employees. Then we apportion. So that will be 40,000. Let me write it down somewhere. That will be 40,245. Instead of me repeating that part, then we take that, multiply by 2, divide by 12. So the first one will be under research. So that's 6708. Then the next one, you repeat the same thing. So I've wrote it down. The 40,245 covers all of that. Then times 6 divided by 12. This is under development is 20,123. 20,123. Right, and then we continue. The last one, I'm using that 40,245. Where is that 40,000? It's 2,683 times 5 days times 3 employees. Ne? Then times 4 divided by 12 for the continuous, the one that are continuing out apart from the research and development. It continues, it's going to be a normal expense. So it's 134, 13,415. 13,415. Okay, so that part is done. So we dealt with the salaries and we dealt with the leave accrual. Right, so let's go. Before I even do that, if you have a question, please write on the comment section. Write your question on the comment section. If you feel like there's something that I did here that confused you, like, yo, Naomi, what are you talking about? Please just put it on the comment section. I will answer you there and clarify the matter. Okay, especially on the employee benefits. But remember what I said, guys. You don't have to worry too much about employees benefits because it is a topic that will be done after the assessments. Okay, so that's perfect. So we go on to the next item. So we looked at the salaries of the laboratory technicians. That part is done. So we're going to go and tick it off as well. That part is done. Now let's go to the laboratory equipment. Right, so it says laboratory equipment was used for the period of September. So this one was used from September 2022 until December 2022 only. Okay, which is during the development of the formula, not research. Research already ended in September, so it was during the development, but not even fully until December only. Ne? During the development formula, the total depreciation on the laboratory for the full 2023 financial year amounted to 75,000. So 75,000 is the full depreciation, and then from September to December, it was used in the development phase. Laboratory equipment. So here we want to calculate depreciation. That's the expense. We are not going to capitalize the whole asset, just the depreciation for the time it was used in the research and development. Only the depreciation. All right. Depreciation on laboratory equipment. Depreciation on lab equipment. Okay. So now let's calculate this. They already gave us the depreciation figure, but they gave us the total depreciation figure. It was 75,000. Only we used it for the development phase from September to December. So that is September, October, November, December. I repeat, September, October, November, December. That is 4 months. September, October, November, December. 4 months. So for 4 months, we use it on development. And then later, it was used as normal expense. Yeah? So 75 times, that would be 8. So the remaining 8, it was just another depreciation on the profit and loss. All right, so let's do the calculation. 75,000 times 4 divided by 12, that's 25,000. This will go, so not under research, this will go under development, 25,000. Then the remaining will be what? 50. 75,000 times 8 divided by 12, that'll be 50,000. 50,000 is just another depreciation. Okay, right, so that is on the laboratory equipment. Right, any other thing? Let's go check out. Right, and then it was, what is it? This donation. Now, this donation cannot even be accounted for as donation because it is questionable. Okay, let me just take this off. This one is questionable, cannot even be accounted for as donation because it's been given for what reason. So we're gonna leave this out. And also, because it does not really link to an expense that we can justify, so we are not going to account for that donation on this asset, and the asset is being given to someone else, so it's not being used by the company, so we're also not going to account for the depreciation on the donated SUV. So that will be out of our calculation of research and development. Okay, so let's us find the total research cost versus total depreciation development cost, which becomes the cost of the assets, the intangible assets. Okay, so we're going to come here and totalize it. Let's take out a calculator. Please also confirm the figures. Right, so let's start from the top. First one, 41,000. I'm starting with research. So it's 41,138 plus 330,000 plus 6708. Right, then equal. So this is 344. Guys, sorry. I'm seeing something else. I'm seeing something else and I'm writing something else. Okay, I think we've been here for a while. It's 377,846. That's what I'm getting there. 377,846. Okay. Then the development. Let's go do the development parts. The profit and loss, I'm going to add the totals because they are different items. Okay. Development 123,412 plus 990,000 plus 2123 plus 25,000. So I'm getting 1 million. So let me just put the figures. 1158,535. That's what I'm getting as my development phase. Okay, as for profit and loss, there's no need to total that. They're not going to the same place. They're not going to the same place. So there's no need to total that. Right. Then, so what calculation was this? Calculation number 7, right? So calculation number 7, we calculated the research and the development. So I want to do the amortization on the development cost, which is now the cost of the, what is it, the formula, preservative formula. So I'm going to calculate the amortization. I'll call it calculation 8, right? To calculate the amortization on that. All right. So what was said concerning the amortization? I'm going to go and read so that we can be able to calculate it. Yeah, I think the laptop has been working for a while, so it's getting slow a bit. Okay. All right. There we go. It says here, the development formula was completed. Okay, the formula was available for use as intended by management on 1 March 2023, and then the formula has an estimated useful life of 10 years and a residual value of nil. Okay, so that will be able to use that to calculate our amortization on the formula. And remember, the cost will be the development cost. The development cost is the cost we use for the amortization. So also we're using straight line. So it's going to be 1158,535 over 10 years. And then for how long? From March. So March, April, May, June. March, April, May, June, 4 months. So 4 divided by 12. Let's do this. Let's do this. So divide by 10 times 4 divided by 12. I'm getting 38618. 38618. Okay, so that is my amortization. Okay, all right, let's try to bring this thing into our profit before tax. Okay, so amortization calculation 8. I'm adding this to amortization calculation 8. Yeah, I'm trying to move my laptop across, but you plus, so 38618 calculation 8. That's my amortization. I think we've come to the end of the the scenario, so I can total these plus 60 896. So I get my total amortization now. One is from calculation 5, the other is from calculation 8. My total amortization is 99514. 99514. Okay, so that amortization is done. What else we have? Research cost. From there, we have amortization. We have research cost. Research cost was coming from calculation 7. Right, so here I'm just going to take the full research cost amount that we calculated there. So it was 377,846. Okay, 377,846. Okay, 7. So we did the research cost, we did the amortization, then the other things that were left as well that we needed to do. Let's finish the depreciation. There was depreciation on laboratory equipment. Remember, the laboratory equipment was not only used on research and development, we also used it for other things. So depreciation on laboratory lab equipment, that depreciation, which was the last figure there, it was 50,000. This amount 50,000. Where's the depreciation on lab equipment? 50,000 is this one. Okay, so that's it. That's all my depreciation. You could find a total, put them in a box and get a total. I'm not going to do that. But you understand what making. Let me just underline depreciation so you understand that once we get here, these are our focus. All these things mix up our depreciation. So I think I've looked at that. So here we looked at, oh yes, then there's employees benefits. That was the last thing that we left. Employees benefits, which does not affect research or development. Remember, these employees were permanent employees and they continued working on the research and they continue working on another research in the company still. So they are employees and benefit. They are employees benefit. Yes, the employee benefit can still be continued to. We can still continue to account for it. All right. So it was the salary and the, what is this one called? The salary and the leave accrual. Leave pay accrual. Salary and leave pay accrual. Those were the two items that makes up the employee's benefits after the research and development. So the salary is 660. So I'm basically taking 660,000 plus the leave accrual, which is 13,415. All of this coming from calculation 7. So that was my last item. That's my last item. So 660,000 coming from calculation 7. You can go and check it there how we calculated that. Plus 13,415 also coming from calculation 7. Check it out there how we calculated the leave accrual. This one will make up the employee's benefit out of the research and development period because these are our permanent employees. Okay, so 660,000 plus 13,415. This will give me an amount of 673,415. So you guys understand the amount of work that went in here. That is why it was 20 something marks, right? You guys understand that this was a lot of work. Okay, so guys, that is it. So you see that in this question we're able to cover the covered property, plant and equipment, intangible assets, impairment of assets, cash generating unit, which is very similar to non-current asset held for sale. Then we covered, even employees benefit was covered, foreign exchange transaction, which you really don't need, was also covered in here. Yeah, so we did a lot in one question. Guys, remember, you are always advised to do more questions. Please work through what is it called, your exam pack, study pack that they give you. The study pack that Unisa usually give you, please work through it so that you'll be able to perform even better. Okay, so yeah, let's just go and make sure that we've finished everything for today in this revision. So we just go make sure we check the full question as that has been done. Okay, so we did the first one, 24 marks, and then this one was 22 marks. So it's done. I did say that I'm not going to do the last one, guys. This one is just general knowledge on as a chartered accountant, general knowledge. Most of this information comes from your auditing. If on auditing, all of you are doing auditing, so even if without auditing, you should be able to answer this one. So this one is general knowledge. I am not touching on this. Okay, so yeah, guys, that comes to the end of our lesson. It has been a beautiful it has been a beautiful lesson. I had a great time doing this. I hope this really does help you guys. Please let me know. Let me just go back. So guys, I want you guys to let me know how this class benefited you. Okay, put it on the comment section. How did you guys find this class? Was it helpful? What else would have you guys prefer that I add as well on these revision classes, in case the next time I want to do something like this? What would you prefer that I add? Yeah, if you are just joining us, please note that I did include a link to download the question on the description. Please go to the description of the video and download the question there. So that you work through with me. The video will remain even after this live premiere. The video will still remain. So if you want to come back and watch it again and again, to pause and rewind and all of those things, you are free to do that. Please do. Please, if you are here, I'm sure by now you have subscribe to the channel. All right, also do talk about accounting with Naomi, to your friends and people to other students. Recommend us. We really love it. If you want classes, if you want to join our classes, we're still now until the end of the year. You are free to join at EUREKA Tutoring. That's my online college. We have classes every week, and we also do a lot of revisions before assessments and like a 1 month revision before exam. So you are welcome to join. I've put all the details. If you want to contact EUREKA Tutoring, I've put the details there. You can contact us in there. Call us, WhatsApp us. WhatsApping is always even faster. If you want to talk to me one-on-one, you can email me. My email is there on the channel. If you check on the channel, you'll see my email, naomirekeza@gmail.com. You can send me an email if you want to talk to me on a personal note. Yeah, guys, there are a lot of content that are in this channel. I want you to really make use of the channel. Go and watch videos that you need. I've done a lot of standards there, like your IS-12, income taxes. I've done it. I've done revenue, IFRS 15. I've done quite a lot. Have a look. I've also done like the accounting softwares as well. I did Sage and I did Pastel, Sage Business Cloud and Pastel, and I'm still gonna do more, even like study tips and business tips. I spoke about my journey to my cum laude journey of my degree. I spoke about it. I even spoke about I did a video on telling people how to pass CTA. You can go and have a look at that, because I know most of you guys after now you want to do CTA. I did a video on that. You can go and have a look at that. So please make use of this channel and talk about it, guys. Talk about this channel. Right, I have another channel, but that is more personal. It's not accounting. Naomi Kerekeza. That one we are it's just my vlogs and other things that's happened on that channel. You can also support it, Naomi Kerekeza. That's what it's called, Naomi Kerekeza. Right, you can support my channel there. You can also subscribe on the other channel. Okay, guys, thank you so much for joining, for watching this recording. I am really waiting for your testimonies after your assessment 2, how you perform. I want you to come back to the video and say, hey, Naomi, the assessment 2 covered 1, 2, 3, 1, 2, 3, and I understood it because of what you did in class, and I'd really, really love to hear you guys' testimonies and reviews after your assessment 2 as well. Please always suggest for me the videos that you want me to do. I am back on YouTube and I'm going to be doing a lot of videos going forward. Okay, so guys, it was a good day and I had a great time teaching. This is what I do. This is what I love to do. Let me just show my video. So yeah, so guys, this is what I do. This is what I love to do. Yeah, so this is what I do and this is what I love to do. I'm so happy that you guys are supporting me until now. Please keep supporting my videos. Let's grow the channel together. Like I said, suggest the videos that you want me to do and I will do more, but I am expect a lot from this channel. So talk about it. Pause these videos, watch as many as you want, rewind, pause, whatever. Do that. Most importantly, don't forget to subscribe, don't forget to like, don't forget to share. Right, all the best with your assessment 2 that is coming up. I really wish or pray that all of you passes and excels and look ahead. Remember, if you want classes, if you want to join online classes, you're welcome to register at EUREKA Tutoring. All the details are on the description. I'll see you guys on the next one. Bye.